Hello friends, today we are going to start module B, and in module B we are going to start unit 4, that is called customer requirement. Customers are divided basically into 6 segments, and these segments are based on their income level. So if you see, that means from 2 lakh to 10 lakh, what is called customer segment? This customer segment is called mass market. Why it is called mass market? Because in India, not only in India, in the whole world, this segment is consists of very big portion of the customer. That means whose income is from 2 to 10 lakh rupees is called mass market. Okay, and 10 to 50, if we see the income level 10 to 50 lakh, so this is called mass affluent, and 50 to 400 is called super affluent, and 400 lakh to 4000 lakh is called H and W, means high net worth individual. Okay, H and W. And 4000 to 1,20,000 lakh, it's called super high net worth individual. And above 1,20,000 lakh, it is values in lakh. Okay, ultra high net individual, H and W. So as we increase from 2 lakh up to 1,20,000 lakh, this means name becomes superlative, and the numbers also keep on decreasing. So our major portion is 2,10,000, sorry, 2 to 10 lakh, that is called mass market. 10 to 50 is called mass affluent, and 50 to 400 lakh is called super affluent. So we have to remember like this. One question can be asked out this, and 400 to 4,000 is called H and W. Then 4,000 to 1,20,000 lakh is called super H and W, and above that is called ultra high net worth individual. And moving ahead, there is one theory called Maslow theory, and Maslow theory actually based on the psychology of the person. That means how the needs are fulfilled by the person based on their level. So Maslow has divided this customer requirement. Now this is not only customer, these are the normal human being also. Just see a psychological need, security and safety need, and social need is there. Then after the esteem need is there. Then self-actualization need is there. That means Maslow divided. Full name was Abraham Maslow. So he divided the need of the person based on their stage. So physiological need is the first physiological. Okay. So physiological is not psychological. Keep in mind. Physiological need is the first and basic need of the person. Then comes security and safety need. Then comes social need. Then come esteem need. Then come self-actualization need. So physiological need is just like starting with first we need food, shelter. So what is my basic need or your basic need? That means food. We require first food. Then we require security. Security means we require security from theft. Then we require social needs. We want to mix up with the social. If these other two first needs are fulfilled, then we go for the esteem needs. Esteem needs, we require some reputation in the society. Then last one, the self-actualization. So this link has been mixed with the physiological need of the person. Means banking requirement has been linked with the needs of the person based on his needs. So banking point of view, physiological need is the, because what we start with dealing with the customer. So we give first core saving account, personal accident cover, house loan, like this. So this is the first need. If you just bank point of view, so core banking account, we first open the core bank account because person will be saving a very petty amount. So he require only the core saving account. So this is the first physiological need. Okay. Then comes security or safety need. Security means now he can open the recurring deposit, he can open the fixed deposit, he can open the life insurance product, endowment product with low premium, and he can go for the tax planning because now his income might have increased, so he may, and insurance and mutual fund products. So these come under the security. Next come the social needs. Like he may need car, he may require home loan, he may require professional like doctors, engineer, lawyer, chartered accountant. They want to expand their profession. Management consultant, architect are there. So that means this become the social need. Okay, you can give the health policies for self and families. You can suggest for investment product like mutual fund schemes are there, systematic investment plan SIPs are there, and unit linked product are also there. So these are the social needs. Now after that is come esteem. Now person want to gain something more other than the social needs. That means he like special term deposit product are there, term insurance product are there, second house is there, because one house is the person has purchased, now his social needs are fulfilled, he has now shown everything to the society, so he require more respect in the society, than esteem is there, so he can go for the second housing loan. Okay, then house improvement, you can house decor loans are there, like you want to esteem needs also, you want to purchase the big car, Anna. So that's also come under the esteem need. And last one is the self actual. Now all needs are when all needs are fulfilled, that means the customer may need the retirement from the all society. That means everything is fulfilled. Now he doesn't want anything. So like pension loan is there. Because in the words of retirement or he already retired, so you can opt the pension loan, retirement solution, banking, pension plan, insurance, senior citizen term deposits are there. So these, that means as per the Maslow, how the banking requirement has been linked with the needs of the person. Okay, and these needs means one need is fulfilled, then the person will go for the second need. Okay, so this is called the hierarchical, but it doesn't mean the one. Sometimes what happen now, even if one need is not fulfilled or partial fulfilled, the person may move for the second need also. Now moving ahead, what customer expect, what quality of customer require service from the bank. That means expectation from the customer about the service quality of the bank basically depends on the following factors. Number one, the tangibility in the service. Tangibility means service must be shown, or he must see. Like if you open one bank account, though, he must be asking the passbook. If you don't get the passbook, that means tangibility will not be there. So physical side of the service. That means every person want to see. Basically, especially in rural areas, the person they 100% they ask the passbook. This is called tangibility, because they want to see as my bank account has been opened. Then second comes reliability. So reliability, that means person must believe that means whatever we are doing, because we are dealing with the financial matter. So person must have reliability on the bank. So sticking to the agreed terms and promises. If you promise something, you must fulfill that promise. And responsiveness, we must give the prompt responsiveness, and willingness to help and extend prompt services, because every now and then due to some power failure or some mistakes or something is there, so we must give the prompt response to the person, okay, or customer you can say. And under assurance, competence, courtesy, credibility, and security. Okay, competition means we should be able to do the job in the proper way. Courtesy, we should speak a very polite manner. Credibility means they must have faith on us, and they must have security. That means whatever fund they have parked with the bank, that must be secured. Okay, that's why the large public sector bank, people believe on the large public sector bank. That means they understand this bank is not going to run away with the money. And empathy is there. This is the last point. Means we should understand the customer requirement from their point of view. Okay, what customer need, we should go in their shoes only. So understanding the service expectation from the customer point of view, which is called empathy. Now we'll see the unit 5, in which we'll see the what is the product development process. Basically, 4 processes are here. So that means we'll see one by one. So product is the fulcrum on which the entire retail banking system depends. That means main is the product. What customer they need from the bank? They need only the product from the bank. So how will you define the product? So product is the fulcrum on which the entire banking system depends. Okay, and product is anything that has the capacity to provide the satisfaction, use, and return desired by the customer. Why the customers will come to the bank? Because they acquire a product which give them satisfaction. They should use them and they should get the return whatever they need. Return means whatever the interest they are expecting, they must get out of that. Now we'll see what are the stages. So first stage is the introduction, and second is the growth, and third is maturity, and fourth stage is called staleness stage or saturation, or sometimes we say decline stage. So we'll see one by one. That means the first stage, it's called introduction stage, in which the product is just launched. Okay, that means product is developed. So you can see here the first stage, the introduction stage. When the product is introduced, the sale volume will be very low, because when the first product is launched in the market, it may not be known to the customers, or customer will not be well known to this product, or they will not be well versed this product. So product will not be sufficient to cover the cost of producing and marketing and servicing. So that will be, product will be giving loss, because this is not known to the customer. Customer will not be using it, they will not be asking us for this product. And second comes the growth stage. Growth is the second stage, in which the product life cycle, the sales volume of product picks up and product is likely to break even. That means this is the point where the product crosses the break even point, means where loss and profit both are equal. So it will cross the break even point, means that means the product now will start making the profit. Okay, after the first stage, when the lot of sufficient marketing has been done, servicing has been done, product has been advertised properly to the customers, now that means now sale volume will increase and it will pick up and it will start making the profit for the organization. And third stage is the maturity stage. This is the stage where growth and sales volume peaks up. That means in this stage, the product will be giving the maximum profit. Okay, and sale volume of the business will be highest and profit will be also be highest. Okay, moving at the fourth stage, this is the stage. Okay, you must remember this is the stage where the is called also stale. Stale means staleness stage and saturation stage, or you can say decline stage. Okay, that means now after reaching the maximization, the product has started declining. What is the reason? Maybe competitors, they have come with their own ideas. They might have copied your or they might have offering better product as compared to that. So now they will start the saturation stage. Okay, and in this stage the sale will decline, or sometimes what happen. Okay, so now we'll see what are the stages are here once again. Number one, first stage introduction, second stage growth stage, third stage maturity, fourth is staleness, and last one, because last one is also counted as a stage, so we can say decline stage. Okay, the final product will die due to the various reasons, because if you are not keeping it in the competitive stage, the final this will die. Okay, that's why you might have seen the market, the industrialist, they keep on changing their product very frequently. They always keep on adding something so that product remain alive in the market. Customers should see, okay, these the new things has been added. That means product should not die at the final stage. Okay, now augmented product are product which are developed from formal product by combining two core product and adding value to the product in terms of benefit and comfort to the customers. Okay, this we can take example of our like ATM service. Okay, so we can think about the ATM service. Now ATM means ATM card and debit card. So ATM card and debit card earlier have been two product. Now they have been augmented, they have been combined. Okay, now and what are the for adding values? That means now you can withdraw the amount, you can transfer the amount, you can inquire the account, you can use in the merchandise business also. That means you can purchase the items. So this adding values. Now you can take the second ATM for your dependents like your wife or children. So these are the value added services. So as per the benefit and requirement of the customer, or you can say the comfort of the customers. Okay, So product can be broadly classified into following categories. Number one, deposit product, or we can say liability product, asset product, or you can say credit product, and other product and services. So we'll see one by one. In liability side, the bank offer different, means we are talking about the liability product. Okay, bank offer different retail product like demand deposit, term deposit, different variations with regard to product features and duration. So liability side, it is what was the liability of the bank, that is become the liability product. Okay, and asset side, bank offer mainly home loan, auto loan, personal loan, credit line against the credit card receivables will become the asset side. And other services, many are there as services like insurance business is there, sometimes bill receivable, bill collection, and nowadays the wealth management is also coming as a product. So this becomes the other product. Okay, now generic product are also called as a core product. Like in banks, if you see what are our core products, so our core product are like our basic deposit account. Like current account is also basic product. So these are the core product. And expected product are like adding additional features. We told that we are credit card facility if are giving, so we can give the additional feature. We are seeing the one more credit card for the dependents. We are increasing the limit in the credit. Okay. Now earlier there were not photo and the signature. Now we are giving the photo on the credit card. Now this without touch credit cards are coming. So these are the additional features. Okay. And without touching the credit card or debit card, you can withdraw amount or you can shop in the market. So these are the new features are coming. These become very attractive for the customers, because they feel these very good features are coming. Because customer always want to take a new type of product. Similarly, you can see the augmented product like adding value in addition to the features. Adding value in addition to features. Okay, so we always keep on adding something. We always keep on launching new features. Okay, like you can see sweep in and sweep out. It came in the saving account and current account. So these also called the value addition. And potential product means futuristic feature in anticipation. Like we can foresee what the customer will need in the future. Okay, like doorstep banking is a new this concept is coming in nowadays. So this comes the, because we know this is coming in the future. So already product has been launched in combining with the all public sector bank. Okay, so this types of product we have already seen: liability side, asset side, and other side. Okay, so now we'll move ahead, and our next chapter is called credit scoring of the individual customer. So this we have already discussed in our previous videos of ABM and BFM. So just we have a burst of knowledge there. So what is credit risk? When customer fails to pay is called credit. Business risk: losing money due to wrong strategy. That means if you follow the wrong strategy, that means you may lose money. Why lose money? Because customers, due to the lose of the customer, we can lose the money. Market is change in market prices, like interest rate are changing, or you can say market is varying. Okay, operation risk: processing failure and fraud. So that means we always take CIBIL scoring that ranges from 300 to 900 is called CIBIL scoring. And credit scoring model are based on the following details of the applicant. Okay, so when one customer approaches the bank, we always see what is his family size. These are her family size. What is his income level? What is his occupation or business? What is his repayment history on real loans? Okay, so we always take into account of all these 4 factors. Okay, and what are the most common mistakes in credit score will be due to the following, like confusion in names. I have seen the people that okay, they are putting the name Manjunatha. So in place of Manjunatha, they have put only the Manjunath. So this is a confusion in the name. Or sometimes customer name is Manjunath and he's putting Manjunatha, because most of the popular names are here. Okay, and same thing, human input error. Sometimes we put the wrong Aadhaar card with the similar names, okay, or wrong PAN card with a similar name. So this becomes the human input error. So this is the wrong credit of the customers. Okay, and one more very big and very dangerous is called identity theft. You might have seen many reports are coming that his credit card credibility has been theft. Okay, because like sometimes no cloning has been done of the credit card, debit card. So this is called identity theft. Okay. Now moving ahead, we have reached at the unit 7, that's called important retail asset. Okay, so important resale asset product are like as follows. Like home loans are there. This for individual customer we are talking about. That is for the retail we are talking about. So home loan is the most popular. Home improvement loan is also there. Home decor loan is there, and auto loans are also very popular. Personal loans are there popular, and credit card is also one of the nowadays coming as a good product for the customers, and other personal loans are also there. And based on this, like personal loans can be grouped into two segments, or you can say two categories: big ticket personal loan and small ticket personal loans. So big ticket personal loans are loan in which the ticket size, means amount of loan, is above 50,000, and average ticket size is 1,25,000. So these are called big ticket, and a small ticket is less than 50,000. So you can remember this big ticket and small ticket. That means less than 50,000 and above 50,000. And what is the average ticket size? Is called 23,000. Okay, so small ticket personal loan are mostly extended by non-banking financial companies because they are also doing the business now. So non-banking financial companies, they are resorting the small ticket personal loan, and whereas the bank, they are resorting the big ticket personal loan, because bank they offer mostly, I'm talking about the mostly. It doesn't mean the bank are not doing the small ticket, but most they are focusing on the big ticket personal loans. And banks are following these two important models for retail loans. I mean standalone model, and one second one called the centralized model. Okay, standalone means bank itself will be doing the loan independently, depending upon the power of the manager or discretionary power of the manager, senior manager, who would there are the loan officer is there. So depending upon the discretionary power of the, that means in bank itself we are doing the retail loans. Okay, and second one is the centralized model. That means under the centralized model, now many loan processing centers has been opened by banks. Different names have been given, but all the function are almost same. So some of the names are like retail loan factory, retail loan hub, retail loan processing center, retail asset processing center, retail loan branches. So these are the suggestive name. Different bank they are open their retail asset hub like this, no, retail loan hub. So basic rule is that centralized model for the retail processing refer to the processing of loans at the centralized place depending upon the geography of the branches. So in like where the possibility of loans is more, so there one specialized branch is open where the all applications are sent by the branches there. Our customer directly they can approach to the these loan assets center or factory, whatever name is given. Now moving at credit card and debit card, we all know that everybody we are dealing with the credit card, debit card, so nothing to here, but just we have some knowledge. The size of credit card, yes, is usually 3 whole and 1/8. You can say 3. 1/8 is the fraction, so 3 1/8 inches by 2 1/8 inches. Okay, so 3 is a whole number and 1/8 the fraction. Similarly, 2 is the whole number and 1/8 fraction. This is the size of the normally. I'm just talking about the normally. Okay, and it has sometimes picture is there, your photo will be there, signature will be there. Okay, and now we are using the chip. Oh, no, earlier we were using that magnetic strip was there. Now for the security point of view, we are using the chip. Or sometimes both are there. So it store the data. Okay, it chip store the data of the, like we storing the your data also. Okay, which link to the your debit card, credit card to the your account. And what is the concept of credit card? First, we are talking about the credit card. That means buy now, pay later. Okay, that means credit card you can buy now, you can purchase right now, but you can pay after that. Okay, so starting with the first universal credit card that could be used at the variety of store and business was introduced in Diners Club in 1950 in USA. Okay, and major universal cards. Another major universal card was Don't Leave Home Without It, that was established in 1958 by American Express Company. Okay, and next means First National Bank Plan, means same America Bank AmeriCard, which was started in the statewide basis 1959 by the Bank of America in California. Okay, that means the credit of developing the credit card, debit card goes to the USA. Okay, and in starting with this system was further licensed in other states starting with 1966 and was renamed as Visa. Now the Visa cards are popular. No, this is an American company only. So named as Visa in 1976, and we are using Mastercards also. No? So two mere popular names are here, Visa and Mastercards. No? These are USA only, based on USA only. So what is now coming to the Indian scenario? So in India, this credit card and it was started by Citibank HSBC. Okay, so Citibank and HSBC were pioneers in Indian credit card market in 1980s. So credit of the developing of credit card in India goes to Citibank and HSBC in 1980. Okay, so among the public sector banks, Andhra Bank, this keep in mind. Okay, Andhra Bank and Bank of Baroda were the earlier started, followed by Bank of India. So first, who are the leader? Andhra Bank, Bank of Baroda, and Bank of India were the early started. After that, all banks followed. Okay, after that, Citibank, Standard Chartered Bank, State Bank of India also came into the play. ICICI Bank, HDFC Bank, dominate the credit card market with the more than 90% market. Okay, that means it was started with the help of the foreign banks, private banks, but further this share has been taken by our own bank. It means State Bank of India, Andhra Bank, Bank of Baroda. Okay, now they are having the 90%. Mainly, credit card issued by bank in two formats. Now, what are the formats? Proprietary format and co-branded format. So, proprietary means bank they issue their own credit card. Proprietary, this is called proprietary format. So, bank issue the credit card in different brand names like Classic is there, Silver is there, Gold is there, Platinum is there, Titanium is there, and there is always some credit limit is there. Okay, like you can withdraw the cash up to 50,000 and you can do purchasing up to 1,50,000, 1 lakh, whatever. That depends on the customer's credit rating. Okay, that means how much you can pay. That's called withdrawal limit, or you can credit limit. So that depends on the customer to customer. This fixed by the bank, depending upon the customer's income, because ultimately customer has to pay at last. Okay, so this credit is fixed by the bank depending upon the customer's credit limit. Okay. Now one more is coming, co-branded format. So bank tie up with the service provider like hotels, oil companies, airline companies, and offer card, so that co-branded product with the brand name of the tie-up company also involved in the card. It's just like a advertisement, you can say. Sometimes you might see in Indian Oil they are using the petrol card. Okay, in branding with the SBI. So both the names will be printed like, okay, in Hindustan Lever is something giving the card. Okay, some hotels you might have seen Asoka, they giving the credit card like this. So this is called co-branded names. Okay. Now next, moving on, how credit card are issued to the customer. That means before issuing the credit card to the customer, we have to take the decision. Okay, so these decisions are taken like the part 1 and part 2. So part 1 deals with the criteria to take decision to issue the credit card or not. First, that means depending on the credit history and income of the customers, we take the decision whether the issue card or not. Okay, second is that deal with the scoring for various parameters submitted by the applicant. We see the credit history, we see the income, and we see the expanding power also. So that this both consisting of both the parts, decision is taking that whether the credit cards will be issued, or the customer is defaulting in another bank. I mean, he's taking the credit card but not paying back. So this credit history is not good. So we don't issue credit card to the customers. Okay. Now, what are the charges are levied on the customer? So number charge is finance charge, minimum amount due, and maximum interest free period, annualized percentage rate, that's called APR also, and other charges and penalties. So like when you issue the cards, we charge some first we take okay 250 rupees per card. Okay, or some bank they are charging 500 rupees. Then they take also charge like annual maintenance charge, take 256 rupees or 250 whatever with GST. Then minimum amount due, and after 1 month of credit the customers has to pay uh, minimum amount for that purpose. And there is also called revolving credit, that means after 50 days revolving credit is there, so customer has to pay uh, and after that they have to pay 3% interest rate. So if they are paying 3% monthly interest rates, and then what is the annualized percentage rate? Okay, because in most of the bank they charge 3% sometimes or 2.5% monthly basis. So if you calculate the annually basis, it become more than the 40%. Okay, so this is very big loss to the customers. But you must tell in terms and conditions of the customer. Okay, if you don't pay in due date, then you have to charge with this. Okay, or customer when withdraw the cash from the ATM machine using the credit card, so they have to pay interest rate. Okay, so these are called other charge and penalties. So moving ahead, the now debit card. Debit card is same function. Only thing is that concept is something different. Buy now, pay now. Okay, with credit card, buy now, pay later. So here, buy now, pay now. That means immediately your account will be debited if you use the debit card. Okay, when debit cards were introduced in history, they were marketed with the sub brand names like Electron, Visa, Cyrus. Now Master. Nowadays India is using RuPay card. Okay, with the help of RBI and BCI, we are using the RuPay card. Okay, but the Electron and Cyrus were not seen nowadays. Simply, okay, now they are out, but still Visa and Mastercards are there. Okay, now we have to say what is prepaid cards. Okay, what is the difference between prepaid cards or preloaded cards? So these cards can be used by bearer of the card only for the purchase up to amount loaded in the card. That means you have to load amount, like just like you are charging your mobile. Okay, so you have to load amount. But your debit card, they are directly linked with your bank account, so that will be debited you from your bank account only. Okay, and cash withdrawal is not permitted in this card. That means prepaid card, the cash withdrawal is not permitted. Okay, so it is mainly intended as a gift card to give somebody, like some birthday days there. So you can purchase one prepaid card, give him, he will go in the market and he'll purchase something for himself as per his choice. Okay, now moving ahead, we are coming to the last chapter of this module B. It's called remittance product. Okay, so remittance product, we have seen, we are working in the bank, we have seen many product are there, like checks are there, demand drafts are there, bank orders are there, telegraphic transfers are there. Okay, nowadays NEFT is coming, RTGS are there. Okay, IMPS are there. So these are called the remittance products. Okay, so retail electrons and card-based product registered quantum jump mainly due to the introduction of RTGS and NEFT, because they are very fast and secured. They are also called fast and secure. That's why we are resorting to NEFT and RTGS. NEFT means we can transfer 1 rupee to no limit, means minimum we can transfer 1 rupee and up to no limit. And in RTGS, we can transfer 2 lakh up to any amount. So limit is 2 lakh for RTGS. Okay. Now RTGS is working 24 hours and NEFT is working in 24 batches. That everybody knows. Okay. So that means now we'll just talk about the NEFT, means National Electronic Fund Transfer. The parties to the fund transfer of NEFT are the number one is the sending bank has to be there. Okay. Then sending service center, that means it will contact its own service center. Okay, and NEFT clearing house center is there. Okay, then receiving side, that means other bank, if you are doing the NEFT, other bank like SBI is sending money to the Bank of Baroda. That means now one branch of SBI sending bank, then service center of SBI, then clearing house and BCI, this will be clearing house. So receiving service center means Bank of Baroda service center, then beneficiary branch means any branch of the Bank of Baroda. Okay, and in this role the art that is called IFSC IFSC code play a very important role because each and every branch is having their own IFSC. Okay. Now RTGS transactions are processed instantaneously and settlement made on the gross basis. This point is very, very important. Okay. That means RT, real time gross settlement. Okay. The remittance are communicated through structured messaging process and settlement for message is made on a gross basis. Okay. How this gross settlement is there? From the liquidity maintained by central bank with the settlement bank. Then what is meaning of gross? Means whatever the amount they are having, they are maintaining. So from there they do the gross settlement. Okay. The remittance are credited on dynamic basis. That means on spot immediately. If you send the amount with the RTGS, it will be credited to the other bank account immediately. Real time basis. Okay. That's why it's called real time gross settlement. Okay. So what are the transactions are carried by RTGS? It's called interbank transactions are there, customer payment transactions are there, delivery versus payment transactions are there. Okay, so they are done by the RTGS. One more is there, that is called electronic clearing services, ECS. Electronic clearing services is the mechanism to effect payment to a desired beneficiary on periodic basis, like EMI. Nowadays we are paying EMI not by the checks. Now earlier this credit company they used to check, they were taking the 24 checks, 48 checks. They're presenting every month. Nowadays they are resorting to electronic clearing services. Okay, like they take mandate and they present this mandate. That means now every month automatic. Okay, so this is the mechanism to effect that desired beneficiary on the periodic basis the money is transferred. Okay, nowadays customers are paying the EMI by electronic clearing services. That means every now and then they don't require to visit to the bank and they will not present to the check. That means automatic this mandate is given, this automatic debit is there and that will transfer to the beneficiary. So with this we finish our module B. I hope that it will be beneficial for you and you can just go through some concept of your bank account also. Some like BSBD account is there, current account is there, some more account as the account for children, account for senior citizens. Just go through because you are working in the bank, so that's why I have skipped here this point. Okay, you must go through this some concept. So with this we'll finish our class. Good day, enjoy, stay healthy, nice day.